Hello guys, let's look at my Euro Australian dollar preparation which I made during the weekend, and we'll see an interesting situation where your confirmation candle may be irrelevant to executing a trade because some other correlations which are very important on the structure played a big role. First of all, my preparation was break and retest above this previous higher high that was created in the market, and before the breakout we can clearly see that there is a strong bullish momentum pushing up towards the higher high structure zone, which was previously indicating for a potential break above, which after that correlates with a break and retest situation. Now, as the market created the breakout happened right there, and after that we can see the whole breakout push phase structure happening. On the way up we can see that the price created a smaller scale higher high and now another higher high slightly above. Now the next thing that I am looking for is the retest happening right at the previous higher high to actually fulfill the break and retest situation. After the retest touch point, we'll need to conclude our confirmation, find it, and probably execute a trade. When we move on onto the next candle, when the market opens, we can see that the price created really big market gap starting from this horizontal level down to exactly at the previous higher high closing level. The price bounced from there and created this bullish candle. So this whole range was at the market gap that we saw. Looking at the retest perspective, this is not a great retest. Altogether, technically looking at the chart, we have the touch point and we have the closing level respected, but we don't have enough structure to work with to identify any bounce scenario that happens or any break of structure situation which should give us the entry confirmation. Therefore, our next thing to do is to actually wait for further structure to be created and look for a new break of structure, new break of the latest key high or key low in this case. Moving on onto the next structure, next candles, we can see this. Right now we can see that the price obviously created a new structure zone, and it's right on that position with a closing level right above that new structure zone. We can see a strong bullish candle breaking above and showing very strong bullish momentum, which technically I can count as a break of structure, because overall looking at this pullback structure, which technically made a retest, not a great retest but still having everything else on the side as a correlation. That's why now we are looking for even stronger confirmations about the break of structure formation. Looking at this pullback structure, which is bearish in fact, we can classify this area or this whole structure zone as the pullback lower high structure zone. And now with this last candle, which the price broke that level to the upside, we can count on a possible continuation structures happening from that point, and this would be a smaller scale higher high, looking only on this last possible continuation structure on the bullish way. Now it's the most important part. We need to consider our breakout higher high. Breakout higher high is always the first obstacle which the price can face after the retest, and now we can clearly see that the price rejected the previous higher high or the breakout higher high from the overall break and retest formation. It rejected it and closed within the higher high area if we set it as a zone to perfectly show its range. Also, at this point we can go on a lower time frame to further see where the exact level, the most probable level for entering a trade would be around this area and what candles we can see on lower time frame. Going on lower time frame, we can see that it's still one candle, one momentum candle, and even if we adjust the closing level on this scale and time frame, we can see that the price rejected this breakout higher high. My stop loss rule is that stop loss should be always below the major structure zone, which was retested and this whole trade was based on. And now here is the first bad thing about this situation. If we place our entry right there, our stop loss should be below the major structure zone, and we can see that the whole risk reward ratio is destroyed. And even to set 1-to-1 risk reward ratio, we are covering a lot of range, a lot of scale from the chart, and we expect a very high take profit level. The next worst thing about this trade is actually the entry level. Even if we have this confirmation candle, maybe for you it's not, or maybe for me it's not a confirmation candle, but let's assume generally that this is a confirmation candle. In this type of situations, when your confirmation candle is actually at the breakout higher high within the zone, rejecting it, respecting the closing level or anything like that, you are directly entering a trade and going directly into a wall, because every higher high area is one way a resist area, an obstacle area. That's why after the retest is done, technically looking, pushing up, the first potential obstacle that's coming on the way is the breakout higher high. And now if we are entering directly at the breakout higher high, that means that we are not eliminating the situation, we are not preparing for a potential double top situation which can happen anytime and directly go into our stop loss. That's why breakout higher highs are very important areas. Of course, breakout lower lows if we are looking on a bearish perspective, as if this is a structure zone and the price makes the breakout lower low and now the retest, even if you are entering around that area, you found your confirmation or whatever else, you need to keep in mind that your trade should be as safe as possible, as risk-free as possible you can make it when the price reaches the breakout lower low, because we want to eliminate the situation when the price comes to the breakout lower low, in this situation bearish situation, and bounces from there and makes a reversal situation, still respecting the structure, still going with the flow, no fake outs, nothing else, still the structure is respected, but you lost the trade. That's why be prepared when the price is close to the breakout higher highs and higher lows as well after the retest, also the breakout lower lows, and don't take trades when the price is right at those areas, because double tops and double bottoms can happen anytime, and these resist and support areas, looking both ways, can be always rejected and you can't fight the wall in front of you. The better situation in this case would be actually waiting for a new minor break and retest above this higher high, close candle above the structure zone and the closing level, giving you a retest on even smaller time frame, and then using this higher high structure zone as your major structure zone and preparing actually for a completely new break and retest, not including this major structure zone that was used right now. Next time we'll be looking at how to identify structure zones in the market, how to draw them, what's the best way to set them on the chart and how to use them. Thank you.